Wow, guys, AMC is headed to the moon, so get your diamond hands on. Because we will definitely get rich off of this stock. And if you guys are holding on to AMC, just like myself, then be sure to get this video to 1,000 likes. Alright guys, we got a ton of AMC stock news to go over, so be sure to stay till the end. First of all, AMC CEO says partner AMC stock surge has helped his business as well. Let's go, this is so awesome. AMC Entertainment's surging stock price has been good for AMC's business, AMC CEO Richard Gelfond said Monday. AMC is our partner, not our competitor, Gelfond said. They're rolling out a lot of screens going forward, and their liquidity is good for us. Gelfond's comments came after a record crisis-era theatrical release of Marvel's Black Widow, which took home $80 million at the weekend domestic box. AMC Entertainment's surging stock price has been good for AMC's business, AMC CEO Richard Gelfond said Monday. AMC is our partner, not our competitor, Gelfond said on Squawk Box. I think their valuation is driven by their fan base, and their fan base loves Adam Aaron. And they love the asset, and they've driven that stock to the higher ranges of valuation. And, good for him. We've been a beneficiary of that because they're our partner. They're rolling out a lot of screens going forward, and their liquidity is good for us. AMC, with operations across 84 countries and territories, has an asset-like model, without real estate agreements or net debt, making it an entirely different kind of company. From AMC, Gelfond said. Shares of AMC have skyrocketed about 2,000% this year in a frenzy driven primarily by meme stock-obsessed retail traders. AMC raised new capital in the surge, including share sales in June of $230.5 million to Mundrick Capital Management and $587.4 million in an additional stock offering. The movie theater chain announced early last week it will not seek to issue more stock after input from its shareholders. That prompted Loop Capital Markets to say the investors are making a huge mistake, as shareholders are usually not supportive of more stock offerings because more shares can dilute the value of current holdings. The Marvel film's success meant AMC U.S. theaters saw more than 2.5 million moviegoers Thursday-Sunday, while its international venues, in Europe and the Middle East, added another 650,000 plus, for a total of about 3.2 million. AMC's entertainment holdings may be an even bigger star these days than those gracing the screens in its theaters, at least with investors. A group of Reddit investors pushed AMC into the spotlight earlier this year when they started a movement to buy the stock. As a result, the shares soared more than 2,500% in the first half. Those holding short positions in AMC weren't, and still aren't happy, and AMC really could use that money. Why? Because there's a lot more that hasn't changed for the theater operator. In the first quarter, AMC burned through cash at a rate of $120 million per month. The company reported deferred rent payments of $470 million as of the end of the quarter. That's up by $20 million from the end of the previous quarter. And AMC corporate borrowings well surpass its cash level. $5.45 billion versus $813 million as of March 31. All of this against the backdrop of a challenging movie market, even without the pandemic in the picture. What does this mean for investors? AMC is a highly risky stock that I would avoid at all costs right now. Reddit investors sent the shares into the stratosphere. But these gains haven't been based on fundamentals. What does this mean for investors? AMC is a highly risky stock that I would avoid at all costs right now. Reddit investors sent the shares into the stratosphere. Meme stocks aren't taken seriously enough in the business world to use their stock as an acquisition currency. But they don't have to be. Cash will do just fine. AMC Entertainment Holdings, which was headed for likely bankruptcy late last year, has seen its shares appreciate so much and has sold so much stock that its market value was recently more than 100 times as much as it was at the end of 2020. Chief Executive Officer Adam Aaron is now mulling acquisitions of rival theater chains. During that time, analysts' consensus estimate of its sales for this year has dropped by almost a third, and no analysts have a buy rating on it, according to FactSet. GameStop, the original meme stock, was worth less than $200 million in the spring of 2020 and hasn't been profitable in years, but found willing buyers for more than $1 billion of its shares last month. So be sure to smash the like button if you are holding AMC.
Joining us right now to break down that big week is Kamal Srikumar. He's the president and investment strategist at Srikumar Global Strategies. Also, Stephanie Link, chief investment strategist at Hightower and a CNBC contributor. And Sri, let's start with you because I think a lot of us are still trying to figure out what the heck happened when it came to the 10-year yield last week. What's your best guess?
The best guess, Becky, is that the volatility came out of the fact, first, the big drop in the yield to 125 on Thursday, because there was a sudden worry that growth had peaked in the whole world. The COVID variant Delta was becoming very effective, they thought, and that the Fed would be ineffective in promoting growth, and that's what caused the big drop in yield. Then by Friday, much of the fear was gone. The expectation was that growth would be back, and so you have the surge back to 135. There are fallacies in both moves. The drop assumed that if growth were to slow, that means lower yield. I disagree completely. If you have a pickup in inflation at the same time that growth slows, the yield will rise. Similarly, on the way up, if you're now happy that growth has come back, at 136, you shouldn't be buying the 10-year yield because you're going to get a negative real yield and you're looking for something much higher. So in both cases, Becky, I still expect, as I've been saying on your program for quite some time, that we are headed toward the 2% mark. The volatility of last week doesn't change my view one bit.
How soon do you think we're headed towards 2% by the end of the year, Sri?
By the end of the year is very much like it. I said, I think on your program in March and April, we are looking for about 6 months away. I think roughly speaking, that is still the case. As you said earlier, watch for the consumer price, wholesale price numbers tomorrow, the next 2 days. And Chairman Powell will probably say Wednesday, Thursday that inflation is still temporary. That might in turn put the yields down in the short term, but longer term, at some point within the next 3 or 4 months, you're going to see the reality of the pickup in inflation dominate over all of the calming statements from the chairman. That's when yields start to rise, and when they do go up, they may go up 20, 25 basis points in a couple of days.
Stephanie, that question of whether we're at peak growth, that's going to be front and center when we're listening to all of these earnings calls starting this week. If we're at peak growth, that may be the case. I think the bigger question is, does that mean we fall off a cliff afterwards? What do you think?
Good morning. I actually think that peak growth is definitely here, right? First and second quarter of this year, but I think the stimulus is still plentiful, and so I think you're going to continue to see above trendline growth. Maybe not the 8-9% growth that we'll see this year, but I think that we'll probably get to about 5-4